Hello, everybody, and welcome to the Tortoise channel. Thank you so much for joining me here on this beautiful Saturday. First of all, I want to say huge congratulations to those of you who have followed me into Lululemon. Surely, I mean, you know that I always put my money where my mouth is, and it looks like the stock is bouncing up. So the question is this another buying opportunity? Is it a time to sell? I mean, what am I doing with my current allocation? And in what are the main takeaways from both the conference call and earnings report? So Lululemon released earnings. Was it on Thursday? I believe it was on Thursday, and I couldn't release a video the next day because I was tied up in meetings with clients all day. So sorry for that. But today I wanna digest the data. Okay, as always, I put everything together into a Word document. And the goal for me is to show you exactly what I think. Okay, there are many important things to discuss here, but then I mean, yeah. So I think it's going to be a very insightful session. As always, thank you so much for watching this. If it's the first time that you are watching, welcome to the channel. Feel free to go back and watch previous videos so you can have an idea of what our framework is, what our approach is to selecting great companies. But to keep it short, we like to find gems in the market, right? So we like to find high quality companies only when we have a significant margin of safety. So, I mean, we can call us a blend of value and quality investors, so to speak. But Lululemon at the time really fit the bill, which is why I became so interested in the company. Okay, so if you find this session valuable, please smash the like button. It took me a while to cover all the main details and put everything together, and that will help the channel a lot. And so, without further ado, let's jump right into it because this is going to be awesome. Okay, so let me start by hiding this here. Let me go here. Here we go. Okay, so what are the main things to take into account? Lululemon reported strong Q3 forward 2025 results with earnings and revenue materially exceeding expectations. The stock rallied 10% as investors welcomed the earnings beat, a $1 billion expansion of the share buyback program, and clarity around succession plan. We don't really have that much clarity because there is no CEO. No CEO has been pointed out yet, but we will discuss more about this as we go along the document. But yeah, so the current CEO will still be well, he will be working until January 21st, January 2026, sorry, and he will still continue as an advisor to the board through March. So, but meanwhile, the board is still on the lookout for another suitable candidate. Okay, so why has the stock rallied 10%? Look, I mean, I'm not a technician, nor so I'm not trying to predict what the market is going to do. If you know me, if you have been following the channel, you know that going into this earnings report, I wasn't very bullish nor bearish. Okay, so I was actually I was I wasn't expecting any meaningful changes because in the last quarter, as you guys remember, management said that they don't expect meaningful performance, meaningful performance, meaningful performance. How can I say? They won't expect meaningful performance enhancements, right? So improvements. That's the word that I was after. So sorry. So they weren't expecting improvements until until early next year. Okay, and this is because that's when they will release new product line. Okay, and all the all the newness that they have been working on, all of that should only start creating meaningful results next year. And so I came to this quarter actually not expecting a lot of improvements. But what happened is, number one, you have this thing. So you have the CEO succession plan. This was very unexpected, in my opinion. We all know that companies, when they go through periods of uncertainty, right, especially a company like Lulu with a phenomenal track record, they feel shareholder pressure. Okay, so they, I think Calvin would have done an amazing job still. I think you would have been able to still execute well on the plan that was laid out, which we'll also talk more later on in the video. But I think the board just grew impatient and they wanted to see results, and so they decided to let him go. Maybe it was him who decided to tell the board that he no longer wanted to continue, regardless. So I mean, this, of course, will cause the markets to react immediately. So that's one thing. Another thing is the earnings per share of $2.59 beat consensus expectations of 2.21. That was a significant beat, as you can see, while revenue reached 2.6 billion ahead of the 2.48 billion dollar forecast. So they were more negative in last quarter, and they and going into this quarter, they actually ended up exceeding their own expectations. So it wasn't as bad as they thought it would be. And they painted a pretty grim picture last quarter. And management was so transparent. I even came out and say, I loved how transparent he was, because things didn't go well, and it's important to flag them. And most importantly, as shareholders, we want to hear exactly what they are doing in order to turn that business around. So according to CFO Megan Frank, she summarized the quarter clearly. We delivered better than expected revenue and earnings per share in the third quarter as a result of our disciplined execution and ongoing strength internationally. And strength internationally, I couldn't stress this enough. Internationally. I mean, international sales have just been on an absolute tear. Okay, look at revenue performance. Despite all the backdrops of tariffs, the backdrop against the backdrop of tariff, the removal of the minimis exemption, and all of those headwinds, they still managed to increase revenue by 7% year over year, while many retailers, especially competitors, are actually seeing declining revenues. Okay, but you can see that Americas, this is where the problem continues to be, and this is expected. Okay, they were very clear. Again, I wasn't expecting any changes going into this quarter. So the Americas revenue declined by 2%. International revenues exploded, were up 33%. Look at that. China mainland alone, that contributed 46%. It was up 46% year over year, plus 47% on a constant currency basis. This represented 18% of total revenue versus 13% in quarter three 2024. As China sales are exploding, what happens is that China is now becoming more representative, right? It's contributing more and more to the company's overall revenues. And we are seeing that this is a meaningful jump from the same quarter a year ago. Rest of the world was also up 19% year over year. That's 14% of total revenue versus 13% in quarter three 2024. So revenue growth was driven primarily by China mainland and rest of the world, partially offset by continued weakness in Americas. So the reason we see revenue up only 7% is because even though international sales have exploded, Americas remain a drag. Okay, what about comparable sales? Look at that. Total comparable sales were up 1%. Yeah. A plus 2% constant currency. Americas, they declined 5%, and this marks the seventh consecutive quarter of flat to declining comparable sales. Okay, so it's not great. They have to turn that around. We will talk more about the strategies that they are implementing, right, and in order to achieve that goal. Internationally, up 18%. China mainland was plus 24%, 25% constant currency. Rest of the world was 9%. And you can see that, let me just zoom in on this document, just to give you a better visual here. Look at that. This was is revenues. United States down 3%, as you can see. Canada down 1%. Mexico, you can see that the Americas were the main problem, right? So United States, namely North America and Canada. And sure enough, going to comparable sales, you can see that the Americas comparable sales declined 5%. Okay, so let's talk about margins and profitability, everyone. As expected, margins remained significantly under pressure. Gross margins, they were 55.6%, down from 58.5% in quarter three 2024. Okay, pressure from essentially higher tariffs, increased markdowns, and the FX headwinds, but most importantly, higher tariffs. Remember that they, just like many other companies in the apparel industry, they manufacture a lot of the production to other countries like Vietnam, Thailand, and so on. And so if you are going to if you are going to impose tariffs on these countries, they will make it more expensive for companies like Lululemon to import them from them. Okay, so this means that they're going to have to adjust, to refine their business model to address these important issues. Pressure from higher tariffs, increased markdowns. What does that mean? It means that they have to get rid of inventory. Okay, so what can they do to get rid of that accumulated inventory? Well, they can boost. They can sell the same products at a lower price. Okay, and despite this, we can see that inventory still went up, but we will talk about that as well. So this was partially offset by higher pricing and lower product costs. So they did increase prices on some products selectively, and lower product costs. Operating margin 17%. This was down year over year. Income from operations was 435 million, down 11%. SG&A was 38.5% of revenue versus 38%. This represented a small increase, and the increase was primarily driven by higher employee costs, which was partially offset by lower incentive compensation. I like to see that a lot. In fact, partially offset by lower incentive compensation. If I show you here the financials of Lululemon, bear with me 1 second. Lululemon. Sorry, it's right here. You can see. Let's go here to financials, cash flow trailing 12 months. You can see that stock-based compensation is actually going down from a peak reached in 2024. I like to see that. Okay, I like to see that share-based compensation is going down, and they can always shift to cash incentives in order to attract and retain talents, but at a time when the company is struggling, right? I think this is a positive thing. Okay, so they are decreasing the share-based compensation. At the same time, they are bolstering the share buyback program. I think this is going to unlock a lot of shareholder value going forward. But still, the share-based compensation as a percentage of operating cash flow is not that significant, right? So let me just see that here quickly. Where was I? Stock-based compensation. It's about 56. Look at that, 56. And if you look at, yeah, exactly. So revenue is about 11 billion. So it's just a small percentage of revenue. And same thing with operating cash flows. Look at that, operating cash flow. So if I do, for example, 56, let me quickly run the numbers here. 56 divided by 1861. That's only about only 3%. Okay, so stock-based compensation as a percentage of operating cash flow is very low, and I like to see that. Okay, I like to see that. Okay, let's move on. Other income expenses. So this was about 6 million versus 13 million. Why is that? Because they are using a lot of the cash, right? They look at the balance sheet and look at cash in short-term investments. It's been going down. They are using part of that cash um, uh, to uh, to to bolster, right? So the share buyback program. So part of that cash is going to be used to buy back stock, but also to reinvest into growth. And the company is going internationally, right? So they are still in the early innings of the international expansion. They have to open new stores, they have to renovate present ones. And so they are using that cash. But because some of that cash was uh, I mean, they were probably generating some interest on that cash, right? If they had it invested in short-term investments like treasury bills. That because that cash is going down, it makes sense that they are getting now lower interest income. Okay, due to reduced cash balances and also lower rates. Because remember, the Federal Reserve is in the process so declining of reducing interest rates, and that means less interest received on cash balances. Okay, diluted earnings per share, we already discussed that. Balance sheet, cash flow, and capital allocation. This was the standout, one of the standouts in my opinion. Inventories were up 11%, and you can see it year over year, while revenues were up 7% year over year. Okay, so inventories are growing faster than revenues. Um, which can be a sign of distress. I don't think that it's too early to tell if that is the case for Lululemon, but we will talk about that as well. Capital expenditures 167 million versus 178, declined a bit, but the company has been trying to become effective while not stopping the growth. Um, while not shying away from pursuing growth. Okay, free cash flow pressured but improving as inventory investments moderate. Share buybacks, as I already told you, board approved an additional 1 billion increase to the repurchase program. This is good. They recognize the company is very cheap, and so it makes sense for them to increase buybacks, and this brings the total remaining authorization. So this brings it up to 1.6 billion as of December 11, 2025. Store footprint, they opened 12 new stores in quarter three. Total stores, they now operate 796 stores all over the world. And these new stores that they opened, six of them were in China mainland, three in the Americas, and three in the rest of the world. Okay. Succession plan: CEO Calvin McDonald will step down effective January 31st, 2026. He will remain a senior advisor through March 2026 to facilitate the handover process, which is important. And meanwhile, interim CEO, CFO Megan Frank, and Chief Commercial Officer Andrea Maestrini, and also you have Chair Marty Morfitt, who will assume an expanded role as executive chair, while the board is still looking for a suitable replacement. Okay, and this transition seems to have been seems to have been well received by the market. They certainly cheered they cheered the outcome, because they see it as an opportunity to reset strategy in the United States. Okay, as I continue to see, I think the current CEO who has been with the company for the last 7 years, I think he has done an amazing job expanding the company into new markets. In fact, during his tenure, revenues tripled. Okay, which is pretty significantly, and look how much growth, look how much shareholder value he has created over the last 7 years. Okay, so I think his execution plan will work, but the board just grew impatient, as I already discussed with you. However, I as because he will still continue as an advisor to the boards and through March 2026. I think this will give the current executive team to deliver on that plan. Okay, updated for forward guide 2025 guidance. They raised guidance, right, which is good for revenues, diluted earnings per share. Guidance now sits comfortably above prior street expectations, which also bodes well for the company and certainly for the stock price. So, what were the conference call key themes? Management commentary, continued confidence in long-term strategy despite near-term US pressure, strong Thanksgiving trading and successful clearance of seasonal inventory, double-digit growth in performance categories like run and train, outwear performed strongly. Guests increasingly value newness, innovation, and value in a competitive environment. This was something that they mentioned more than once. So guests are because they have been tightening their purses, right? They have been quite aware. They in terms aware of so they have been cutting back on spending and they prefer newness, innovation, but also value. All right, so this is important, and the company is adjusting to that. US Growth Reset, three strategic pillars. This is something that both the CEO, Calvin, and the CFO highlighted, well, broke down during the conference call. They made everything very transparently, and you can see that management wants to execute on three pillars. And these are the pillars that will enable the company to turn the business around in the United States. Well, at least we hope that will certainly be the case. So, what are the main things that I have managed to take away? The company is working in the creative designer. The company is working with the creative designer and its design and innovation teams on its product pipeline. As I've shared, this is Calvin. We know that our current merchandise mix, particularly in North America, does not fully reflect the go forward vision we have for our brand. The team has been at work, and I believe that we have a strong pipeline of innovation and approach to new style creation. You will see the impact of this work beginning in spring 2026 and and continue continue to strengthen throughout the year. Okay, again, they pointed this out. Don't expect meaningful changes until spring 2026. So we are increasing the frequency and breadth of new styles. One of the main criticisms of Lululemon was the fact that, I mean, they have to innovate. They have to create new styles that resonate with clients, so with customers, and that's what they are doing right now. And we remain on track to bring new style penetration to 35% next spring. We will be updating several of our key franchises while also maintaining a strong pipeline of new innovations across our performance offering. So expect innovation, expect a whole new breadth of new styles, and this should be hitting the market beginning next year. We'll be bringing newness and novelty across some of our most important franchises. Our mainline product development process currently runs 18 to 24 months, and we are working towards reducing it to 12 to 14 months. What does that mean? It means that they want to be more agile at the time of deciding which products are working and which are not, and which ones should be replaced or not. Okay, they want to become more agile to respond quickly to customers, to meet customers' goals. And again, he mentioned this once again, we've let product life cycles run too long within some of our key franchises, which is why now they are working to reduce the product development process to 12 to 14 months. Okay, we have not inspired our high value guests to purchase as we had in the past, so they understand the problem, and here is the solution. I really like to see that. In addition, given our improved agility, we will be better positioned to read, react, and adjust our assortments based on guest response to our offering. Okay, so we already discussed one of their pillars, which is product creation. What about the second pillar, product activation? This is where they are improving the in-store and online experience, engaging our high-value guests in new ways, and better aligning our brand and marketing activities with product inflections and drops. We are working to improve our in-store storytelling by shifting product adjacencies and category flow to ensure the guest is seeing the versatility and coordination across our assortment. We are improving our digital experience. Okay, and in fact, if you go to the website right now, in case I'm not sure if you are aware of if you are a shareholder in Lululemon, maybe you already shop, and you already shop at the stores or on their website. But if you go to their website right now, you will see that they will recently rolled out a website redesign with enhanced visual merchandising and elevated storytelling. And the goal is to offer an overall more modern guest experience to inspire purchase and increase conversion. All these things. You see what they do? I mean, I love seeing this in management. They they are telling you exactly what they are doing every step of the way, very transparently, no bullshit. Okay, no BS. We messed things up. There was indeed mismanagement, and this is how we are hoping to tackle those issues. Okay, I love seeing that. Finally, our brand building and marketing activities will continue as we invest in integrated marketing efforts around the world with a planned focus on driving awareness and excitement for both product newness and innovation across all athletic activities as well as lifestyle. Probably some of the words that were more that were more that were some of the words that were repeated more often during the conference call were newness, product newness, innovation. Okay, so that's important because it means that they are really focused on it, on doing that. We will leverage our ambassadors, very important because they have a strong brand reputation, okay, built over years, and their ambassadors are going to be instrumental in engaging, okay, with guests, and so I think they should leverage their ambassadors very well, and that will unlock further value. Last but not least, enterprise efficiency. Of course, in a world with higher tariffs and the removal of the minimis provision, and while we work to inflect the US business, we have a heightened focus on ensuring we are operating as efficiently as possible across the enterprise. The actions taken include strategic pricing actions, supply chain initiatives, including vendor negotiations. This is important, yeah, and DC network efficiency. So distribution channels, network efficiency, and enterprise-wide savings initiatives. But they also emphasize that while we are pursuing efficiencies across our company, we don't want to don't want to lose sight of future growth opportunities. Okay, and that's why they are still reinvesting into growth as well. And so they will have to balance it out. CFO Megan Frank, we believe this plan, which means the three pillars, everything that they discussed above, we believe this plan will enable us to deliver more differentiated products, react faster to guest demands, elevate our in-store and online experience, and ensure guests are aware of the innovations coming in 2026. Okay, very important. So what were the Q&A highlights? Apparel category remains competitive with evidence of consumer trading down. CEO mentioned that. Lululemon held share in premium athletic but lost slight share in performance apparel. And remember that they performance apparel is very important for Lululemon. In fact, when I talk to people who wear their gear, they always say that performance is that they feel that the fabric is just amazing. It allows them to be well. It allows them to achieve better levels of performance compared to other fabrics. These are things that you wanna hear. Okay, so they need to reignite growth here. New product development informed by guest data, ambassador feedback, and community research, important. Early proof points from new design language are encouraging, but meaningful impact expected in 2026. Okay, so now let's discuss my main takeaways, my personal observations from all of this. Number one, while overall sales rose, the Americas region continues to weigh on the company with with international explosion led by a massive surge in mainland China. This is not surprising in terms of the Americas region. So it's not surprising given that management has continuously emphasized that they don't expect to see performance improvement in the region until quarter one 2026. Also, Lululemon is in the early innings of brand adoption in Asia and Europe. The market realized that a 35% growth engine in China is powerful enough to offset a mild contraction in the mature US market, effectively de risking the growth story. One of the main criticisms of the company for so long was that, oh my God, guys, you are so concentrated. Over 70% of your sales come from the Americas. Well, I mean, what about this growth internationally? Okay, so this is definitely them responding to that criticism, and not only that, because the brand is so well received internationally, it makes sense for them to double down on those on that growth expansion. Okay, but what I want to emphasize here is that I don't, and I mentioned this here, where is it? If the US decline accelerates, let's say it accelerates from 3% to 10%. Guys, no matter how great the international expansion is, this will dent the company's overall revenues. Okay, so I don't want to see deterioration in that market, further deterioration in that market. We either things stabilize for a while or they bounce up, but what we don't want to see is a deterioration of the problems in the region, because this will overwhelm international gains. If the brand loses relevance in its home market, it eventually hurts the brand's cachet globally. Okay, so this is very important, and the most important thing for you guys is, can they turn can they turn the business around in the Americas region? That's it. That's the only thing that casts a lot of doubt on the stock right now, and this is one of the reasons why I remain constructive the company going forward, but not overly optimistic. Like, okay, I mean, like some people maybe, and so I want to see that the situation in the America is improving, and if that is the case, then this means that the moat hasn't been breached, the moat hasn't been disrupted, and that they do have the competitive edge that I always believed they had. Okay, awesome. So another thing, promotions, discounts may rise. Remember, because inventories are going up. What that means is that if inventory levels remain elevated year over year, this is often a recipe for more markdown pressure if demand doesn't firm up. Okay, so if inventories continue to go up, they're going to have to get rid of them at one point. And how do they get rid of them? They have to lower prices. And this will definitely dent their margins. So we want to keep a close eye on the inventory of the evolution rate going forward as a percentage of revenue. And the biggest red flag, the biggest red flags of all is if we see sales declining and inventories going up. That is definitely what I don't want to see. Robust increase to its stock repurchase program, now totaling 1.6 billion, embodying confidence in long-term business health and future growth. Fiscal year earnings forecasts rise significantly, outdoing consensus expectations, setting an optimistic tone for upcoming quarters. And again, I have to do to hats off to the current management team, because by delivering EPS of 2.59, beating consensus, management demonstrated that they can protect profitability even when top line growth in the biggest market turns negative. Despite market challenges, Lululemon has maintained impressive gross profit margins of 59%. So against all the backdrop drop of competition, tariffs, removal of the de minimis exemption, and all of that, they still maintain one of the healthiest margins among their competitors. Okay, so they can afford to absorb a lot of these costs as well without increasing prices, and I love that. The market will likely the market likely views the CEO transition as an opportunity to reset the US strategy. With US sales falling, fresh leadership is seen as a potential catalyst for product innovation to counter all over worry. All right. So, bottom line remains a high quality brand navigating a cyclical slowdown in its most mature market while international growth continues to scale rapidly. Execution in 2026 will determine whether US momentum can be reaccelerated and valuation upside unlocked, because this is going to be a key catalyst for the company. So even though the stock is up sharply after earnings, this is my eToro account. I only use eToro again for if you are watching this for the first time. I use eToro only with my clients for educational purposes, but I always use interactive brokers to execute all of my transactions. Okay, so you can see that even though the market reacted very favorably, the fundamentals of the company, as far as the American market are concerned, have not changed. Nothing meaningful happened there. Okay, and that's what and so what I want to see is that change, right? And if that happens, I will have no problem even adding more to my position. Well, I don't know, because I already have a very low cost basis. And I don't know. No, actually, I don't think I will add more. In fact, I don't intend to add more to my Lululemon shares, only if we saw more selling pressure and I could lower my cost basis, provided the story has not changed. But I'm very comfortable with my exposure right now, and I'm not doing anything with it. Okay, so I'm going to hold on tight. I'm going to hold on to my shares tightly, and let's see for next year, for the coming year, to see if the company can indeed prove that they are the number one they are the number one athletic apparel company in the world. All right, and I do believe they have a moat. So, guys, if you found this video insightful, please share, smash the like button. And if you have been following me, you know that I'm very transparent with how I allocate capital. And for those of you who followed me into the company and bought it at a very, very attractive price, congratulations. I personally won't sell, but it's not financial advice. Always consult your financial planner. Everything I do here is for educational resources. That said, I put my money where my mouth is, and I'm holding on to my shares. So let me know if you like it. And also, before I leave, remember that on December the 20th, which is next week, I will be holding so I'm having my first live live YouTube appearance here. So if you guys want to ask anything, just feel free to join, and I would love to meet you, and I would love to read your questions as well. So take that opportunity to ask me anything. Okay, and stay safe, guys. Yeah, speak to you soon.